What is up, guys? Welcome back to my channel, GG Forex, and on today's video I'm going to be going over one indicator that has potentially really helped me out. Now what I mean by this is I've so far placed 6 trades using this indicator. Now I don't rely on indicators at all. I still understand the basics of trend lines, resistance, and support lines, all that comes into effect, but I purely use this indicator to get in and potentially get out of a trade. But I will explain that later on in the video and how I use it to structure it. But I just wanted to prove that I've placed 6 trades on this. I've won 3, lost 3. Now I know that doesn't sound amazing, but for me as a beginner learning the steps, that is because, as I said on my last video, my success rate has only been 34%. But with this new strategy, my success rate has now been 50% so far. But even though I've only won 50% of my trades, I'm still profitable. Now I'll put screenshots up here so you can see my trades. I've done 6 trades using the MACD strategy, as I will explain in a second. And if you add up the total losses and add up the total wins, I've actually still made £91. So again, it's not great because I'm still learning. Won 3, lost 3, but still made more money, which is the main thing. Okay, so let's just jump into this video and I'll explain everything for you. Okay guys, all right, we are on my computer, and as you can see I've got 3 screens laid out here, or 3 charts laid out. The same currency pair, but with 3 different time frames. So on the top left I've got my daily chart, on my top right I've got my 4-hour chart, and my action frame, time frame, which is where I'll be placing the trades on, is the 30-minute chart. So what I want to look for here, I want to look for trend lines, because this is a trend-based, well, not really a trend-based strategy per se, but you want to go with the trend. So as you can see here, the green line is the 200 exponential moving average, and the red line is the 50 exponential moving average. So what this tells me is if the price, which is here, is under the green line, the 200, you want to go short. That's what you want to look for. You want to look for short trades because that is the trend of the day. Now this is a Sunday, so the markets aren't open yet. So at 12 o'clock tonight, the Asian session will be starting, and then everything will start moving again. So I might play some trades if I see the right setups that I'm about to explain to you now. So as I said, if it's under the 200, you want to look for a short on the daily time frame. But what I like to do to doubly confirm that is heading in that direction, so that is the trend line, is I want to confirm it on the 4-hour chart as well. So if the price is under the 200 exponential moving average on the 4-hour chart as well, then that is further confirming that it is a downwards trend. So as you can see here, as the price is under on the daily but over on a 4-hour, I'll just walk away because it's not really backing up a strong direction for me. So I'm saying that I would walk away from this trade purely because the daily is under the 200, but on the 4-hour it's over the 200. So it's kind of up and down. It's not 100% okay, it's going in this direction. So what I'll do, I have a list of currencies that I want you to write down for this. So these currencies are best for this type of strategy. So as you can see, I'll bubble them all to the top. So all I have to do is literally just click them and then they all change, because I've linked. I've done other videos where I've shown you how I set up my charts and how I link them. So all I have to do is press the currency pair and then they all change into their different time frames, sorry. So that way it's just a lot faster to scan and read charts and understand really what's going on. So this is obviously now the Euro USD. Let's have a look what's going on. The price is over the 200 on the daily, the price is over the 200 on the 4-hour, and the price is over the 200 on the 30-minute chart. So I'll be looking for a long position on this trade purely because all the time frames are agreeing. It's definitely a bullish trend because we had all charts saying the same thing. It's going over, it's going over, it's going over. So let's just zoom in on the 30-minute chart. So basically use the 1-day and the 4-hour chart to confirm the trend line, which is obviously for us is up. So we're looking for a buy option. And let me just zoom into the 30-minute chart. Right, let's get rid of the volatility so we can see the MACD indicator. Right, so what we want to look for the MACD. So what is it? Basically, this tells you the potential pivoting points of the charts. So if we just have a look, let me get my crosshairs out so it's a lot easier to see. So what this red line right here, that is the MACD line. This yellow dotted line is the signal line. And these bars here, they are just showing you the distance between this line here. So let's just zoom in so it's a lot clearer to see. Right. Grab tool. Right, can we all see this? So, this red line is the MACD line. This dotted line is the signal line. So what you want to do, and in the middle, here's the 0. And these blue charts are displaying the distance between the signal line and the MACD line. The more momentum, the more gap between the signal and the MACD, the bigger these bars go. Okay, so that's the basics of the MACD. So what you want to look for is if the trend, as we said from the higher time frames, is above the 200, is above the 200 on the daily and a 4 hour. And what we want to do is we know it's a bullish trend, so what we want is to see the MACD line break through the signal line, the dotted line, and when we get that confirmation when it's below the 0, so the 0 line is this green bar here. As you can see, it should say 0 on the right, so we get it bang on. You see it on the white bit here, it says 0 right there. Okay, so this is your 0 line. So what you want the price to break through, or the moving averages to break through this 0. So it's come from up here, it's broken through the 0, it's come a bit, it's come down again, and what we want to see is the MACD line, the red line, to break through the signal below the 0. So we're below the 0, it's broken through. This would be our buy entry. Now, let me just stick a horizontal line in so we can see where we would buy in using the MACD indicator. So trend lines, vertical line, so break it, we want to get in, I'd say there, that's a clean break. Okay, let's just do it again up here on the chart so it's easier to see. Trend lines, vertical line, boom. Okay, let's just do the grab tool. Let's just lower this down a little bit so it's easier to see. So what can we see? So it's broken through, and as we can see here, we would have used, you need to have a strategy on where you would enter. For me, I would have just entered here, so where it broke through, so this line here, so I would have probably entered my trade as it broke through the top of the previous bar. So let me just draw that on. Horizontal line. So I would have entered here because you want to use the previous bar for entry and confirmation. Again, this is the 30-minute chart. And let's just click that there. And then you think, right, okay, so where do I put my stop loss? What a lot of people do is make mistakes, is they put their stop loss using their ATR, which is great, but they do it on the 30-minute chart, not the daily. Because remember, you've got to always look at the higher picture. So what we would do is we'd go back out of this chart, we'd look at our daily chart, zoom in on this, and then we'll add our ATR indicator, our average true range. We can see here that our ATR is moving at 69 pips. So what we want to do on our 30-minute chart is put our stop loss 69 pips below our entry. So let's just do that now. So the only way to do that is to go on our tools, go on measuring, price range, go on our entry line, drag down until you can see 69 pips. Let's just draw that on here. Trend lines, horizontal line. Here, we'll change the color so it's easier, we'll make it red. And then, here's the tricky thing. This is why it could be quite difficult to figure out where to put your take profit line. So, the best way to do it if you've got time. But obviously if you're working at 9 till 5, it's quite tricky. So you can't stare at the screen all day, but the best thing you want to do is where the MACD line breaks the signal line to come up, you kind of want to do the opposite on the other side. So as you can see here, trend line, vertical line, it breaks here. So this is where you want to get out. Obviously you're never going to get this perfect if you're away from the computer, if you've got family, you've got kids, or if you're just busy at work, your normal 9 till 5, you're not going to be able to stare at this and see where it breaks through the MACD line. So this is where we're riding, and this is how much of a pip move this is. This, we're going to measure time and price. So we're saying we want to enter here when we get out here. So how much of a pip move and how long would this have taken? And obviously there's no guarantee you're going to get up here. No one gets it perfect. So let's just say you did that. So we're looking at 83 pips, 1,590 minutes. So what's that in actual English? So it's 26.5 hours. Let's call it a day. So in one day, we've gained 86 pips purely by going off this one indicator. So this is a 30-minute chart. Each of these bars is 30 minutes in length. So this is what we're capturing. Actually, so let's just rewind this a sec. So the MACD is broken through the signal line, and we've got the momentum here saying it's doing so. And remember, the other time frames are saying it's a bullish market. So the price is above the 200 on the daily. The price is above the 200 on the 4-hour. And also the price is above the 200 on the 30-minute chart. So we've got 3 time frames saying it is a bullish market. But again, you want to be wary on the high time frames. As you have a look, we have a resistance and a support line. So you compare, so where you would enter this trade is very different. So let's just draw the resistance line and the support line on here for you. So again, you have a better understanding of the higher time frames, because remember, even though it says it on the 30-minute, you still want to take into account what the higher time frames are saying. So we have a support line here, don't know what I pressed there, trend line, horizontal line, boom. So this is the kind of the market. It's a sideways market on the daily, but because we're using the lower time frames, we can really take advantage of the sideways market. So again, as we can see, this is our support, this is our resistance. The price is in the middle, so it's still got room technically to go up, hence why it's saying it's a bullish market. I'm guessing, well not guessing, I'm just educated, saying if it breaks this point and comes down, it could be broken the resistance line, but the likelihood of it bouncing back is quite high. But we're not worrying about that just yet, so we're looking at our big higher time frame, support, resistance, the price is in the middle, so there's still room to move, especially on the lower time frames. So let's just go back to our 30-minute chart. We can see here the price is, or the moving average of the MACD line has broken through the signal, which is here, and it's broken out of that, showing it's going to come down again right up here. So this indicator has made me, it's not a guarantee. You will get losing streaks, you will get winning streaks, but what it gives you is a clear understanding of what the market's doing. Well, let's just look at other examples, shall we? Just shrink it a little bit so we can get a good understanding. So if the market was going down, we'll look at the MACD. Let's say we want to do a short instead of a buy. Let's say the market's going down. We'll have a look at the MACD indicator. Okay, it's above the 0. We're looking for the MACD line to break through the signal line, as we can see here. And look, right there. Let's just draw this on so you can see that again. Trend lines, vertical line. It's broken through right here. So you're looking for a short, and then it's unbroken here again. So you're looking to get out your trades. Let's look at vertical lines. You'll be looking to where it broke up here. So what pip move is this? Well, let's just measure it. Let's go and measure time and price. you probably would have entered, the entry on this would have been here, so you would have looked at the bar to the left, so my entry would have probably been here. Just because I like to play it safe, I want to confirm the movement. And we're looking at 114 pips. 85 bars, so what's that? 30 times 85. Or let's just do it as 2550 divided by 60. 42 hours, so we're looking at roughly just under 2 days. 2 days, 114 pip move, purely by using the MACD indicator. As you can see here, it broke through the signal line. And then, as we can see, that is showing it's a selling move. So it's obviously done that, it broke through, and it's come all the way down and then broke through the signal line there, which is an indication to get out of that trade. And it's not a guarantee, this trade, but if you have a look through, I encourage you, just have a look through this. Have a look through your support lines, look at the trend line altogether, look at your resistance as well. So as I went on the high time frame, I noticed there was a support and there is a resistance. If the price is bouncing off that support line, then you can know, and obviously confirmation, if the price is above the 200 on the daily chart, if the price is above the 200 on the 4-hour chart, then you know it's you want to be putting in a buy option. So we've gone through that, we've got confirmation, it's an upwards trend, you want to be putting in buys, you have a look at the resistance line and the support line, the confirmation is that is good, and then you look at your MACD. When the MACD breaks through the zero mark on the graph, and then you look for when the MACD line breaks the dotted signal line, that's when you want to get in. And as you can see here, it basically works most of the time, but again, it does give false signals. So what I would recommend is, if you think about placing a trend, look back, go back through how consistent is the MACD line on this currency pair right now. If there's a load of false signals, maybe walk away. But if you're looking back and you think, as we can see here, right, we're looking for a short, it's overextended, huge bar, it's broken through, it's had a huge drop off. So maybe that's your strategy in the MACD. Wait, don't do signals where it's kind of gone through the zero and broken through. Wait for signals where it's completely broken through, it's at the really high top, and then you wait for it to break through and it's going to come back down. Don't do little ones down here where you can see it kind of going through the zero but it's still near it. It's uncertain when it's like zigzagging, it's crossing each other. Wait for a clean breaks and clean moves, jump on that trade and follow the trend. Don't go against the trend, you'll be going against the tide. It's just making it harder for you. But again, when you look at it, it's broken through. You could ride it down and then, okay, it was breaking up, well, it's bound to go back up, which it does here. It's broken, it's come back down again. But how I want to play this is, because I'll be working a 9 till 5, hopefully, after my furlough session. I won't be doing loads of trades up and down, up and down. I'll be doing 1 or 2 trades a day. When I'm seeing the clean break, and I'm just riding that down for, again, as you can see here, it helps if you have a 9 till 5 because you're looking at maybe 1 day, 2 day moves. So if you place this, if you see a momentum break at maybe midnight, and then probably by 6, 7 o'clock that trade will be close to hitting your take profit mark, that's fantastic. So if you want to know where you put your take profit, if you went home, what I would do is I would put a 1-to-1 reward risk. So if the reward to risk, not risk, reward to risk. So I would say if the price, if the daily ATR is saying it's 69 pips of movement, then I'll do 69 pips above my entry point. Same as I do my 69 pips below the entry point for my stop loss. That's where I'd place it as a safe bet. Again, it could go a lot more than that, but again, we want to play it safe, we want to get in, we want to get out, we want to take our profits. So that is the MACD indicator. If you've got smart charts, add it on, have a look through, go through previous charts, set up your charts how I have. So you've got the daily on the left, you've got the 4-hour on the right. You look for the trend line. So is the price above the 200? If the price above the 200 on the 1 day and a 4-hour chart, then you got confirmation that it's a bullish trend. So that's fantastic. When you got that sorted, you know what to do. Then you got to look for the crossover. When the price breaks below the zero and then crosses the dotted signal line, that's when you want to enter the trade. And when you got that, you ride it all the way until it breaks the zero again onto the other half. And then when the MACD line breaks the signal line above the zero, that's when you want to get out the trade. So I hope that makes sense. And also, if you want to do a trading stop loss, do it, because when you're away, it just helps protect your profit. So if it keeps going, you can keep moving your take profit bar up and up and up. Ride that trend wave and just have your stop loss just following that current price at a set distance. That way you're safe and you're not going to lose all the money that you gained if you walked away from the computer for what would be 1 or 2 days. Okay, so that's the MACD. Give it a go. Let me know in the comment box if this video has helped, and this is the only indicator that I can clearly see when it does this, the market should do that, and it actually does. So that's why I love the MACD, and so far it has proved profitable for me. Now I understand the steps, so hopefully when the market is open tomorrow, well, midnight tonight, I'll be able to make a lot more trades and then do an update of my MACD progress, because in 2 weeks time my 3-day live training starts, and that's when things get really serious, because I'll have my live account, it'll be real money, and then that'll be a whole new game. The stress levels will be higher, but I just got to think about it. Strategically look at the high time frames, go with the trend lines, don't do anything stupid, don't go into trades because I feel like I need to place a trade. Stick to my rules, stick to my plan, and I should be profitable. But again, hopefully you understood what I meant by this. If you've got any questions, please leave it down below, or if you want to DM me on Instagram, everything that you need to contact me will be down below. So again guys, thank you for watching. I hope you enjoyed the MACD and make some money.